How you doing today, Discover Your Options students? You're back with Coach Jay Johnson, and we're on another page from the guide that all of you either have or shall be receiving. Now, in another video, we talked about how options just can't be the only tool in your portfolio. Your portfolio has to be diversified through multiple streams of income. So on this page, how does the Circle of Six strategy create a path to financial freedom? Well, you ask, what is the Circle of Six? This is a discover your options way to help build and diversify your portfolio so you can start building that generational wealth. So we'll start breaking these down and talking about what each little step does and how you want to go about maintaining them. So core stocks are your foundation. This is the building blocks of every portfolio because these portfolios, guys, we're setting these things up for your children, grandchildren, great grandchildren. This is what we're doing this for. These should generally be reputable, stable, centurion companies that always pay dividends. So we'll get in, we'll have probably other videos that break this down that talk about stocks and dividends and more about centurion companies. But for right now, you want those solid blue chip companies with really solid metrics that have a repeatable process that pay a really good dividend payout. Because them dividends, you can pass those down to your children, grandchildren, great grandchildren as well. Centurion companies are 100+ years old. They've been around. They've seen market crashes. They've seen all kinds of scandals. They've seen everything, and they're still here. So these are companies that have seen it all. They've weathered the storm, and they're still here. That means they're probably going to be around for another 100 years. They're not going anywhere. These are companies whose stock you will hold on to. You're not buying and trading these foundational core stocks for your portfolio, guys. You're not unless you see there just one's going out of business and you got to get rid of it. But for the most part, you're holding on and you're passing these down to your children, grandchildren, and great grandchildren. Use your net profit from options to buy these stocks. So we talked about in another video how buying stocks can get you up there to 10, 20, $100,000, depending on how many of them you're trying to buy. And when you're buying stocks and you're trying to get nice dividend payouts, you're going to need couple hundred to thousand shares of a blue chip company, and that's going to run you quite a bit of money. So we take our next step over to options. Discover Your Options uses historical data and public news sources to predict the direction stock prices will take for a company over a given period of time. So we use the Discover Your Options systems to break down a repeatable trend that we see in the historical data of its share prices. Then we use public news, things that are posted in stock news forums and in financial news forums, and we take that information and we combine that with our historical data to predict where the stock price is going to go in a future date. We sell your contract to other interested option contract buyers to capture the premium difference. So we're buying it at a premium and we're selling it at a higher premium. Use your net proceeds on options to buy more stock in your core companies. So that's kind of how we're trying to balance this. So, for an example, if you in a 12-month span, if you build your option portfolio up to $40,000, you got a little bit more room to spend $5,000 to $10,000 on some core stocks now. Next step, penny stocks. Penny stocks is a higher risk stock form of trading. Why are these higher risk? Because there's generally not a lot of historical data to support your predictions. So usually your penny stocks are a lot of newer companies that are trying to break through the market. So they don't have a lot of historical data. They have a lot of risk tied to them. Yes, there are penny stock traders that do make a lot of money. I mean, insane amount of money trading penny stocks. So we definitely wouldn't tell you to never look at them. It's just due diligence is always mandatory. Learn from a mentor, someone that really can teach you how to read the charts correctly and to give you a better prediction on penny stocks. Discover your options system necessarily doesn't deal with penny stocks, but yes, I do have penny stocks in my portfolio, and yes, I have done well at penny stocks. So I won't say anything bad about them. I just say that we don't use necessarily our system on penny stocks because they traditionally don't have really good historical data. And most of those companies usually have lousy metrics as well. So that's why it's a lot of risk involved. Generally, newer companies that are waiting for their first breakout, you can use proceeds from penny stocks to help fund your options or possibly core stocks. When I hit on, I believe it was a oil company, either CEGX or MMEX, one of them oil companies down in the Permian Basin. I mean, I hit really well on those, and we were able to take that money to purchase some more options, which helped fund more core stocks. I mean, the diversification kind of helped supply them all. Excuse me. Next step, that fourth step, dividends. We spoke about it, or it was mentioned in core stocks. So dividends are cash payouts that companies make to their shareholders on a quarterly or annually basis. So your core companies, your core stock companies, they pay you cash per share as like a thank you for being a shareholder in that company. And they do that quarterly, some of them doing annually. You just have to find out through your research, and then you got to look at what their trailing dividend payout rate was, so you can kind of see what they paid out last year in dividends. Because me personally, I like to see something around $3-4 annually. That's just me. You might be okay with $1 $2, but if I'm getting a core solid foundational company in my portfolio, I want them to pay me. We strongly recommend that your core stocks be made up of companies that pay dividends. If your core companies don't pay dividends, just get them out there. Just get them out of there, man. We strongly recommend that your companies pay dividends. Use dividends to fund your DRIP program, which will be the next step. Over the course of time and with enough shares, your family can actually live comfortably on dividend payouts. I mean, it might not be you necessarily, depending on how many shares you buy and with the dividend payout, but your great grandchildren, they will be hang your picture above the fireplace and be like, "You're awesome. Can't believe they had the foresight to do this." What is DRIP? That's dividend reinvestment program, which automatically reinvests that dividend payout that you're getting every 3 months or annually into more shares of that company. So if company A pays out $4 annually for dividends, that means every 3 months they're going to give you $1 per share. So if you got 300 shares of company A, every 3 months they're going to just give you $300. Thank you very much, sir. We appreciate your service. We appreciate you being an owner a partial owner in the company. The dividend payout is per share. So what the DRIP program does is they'll take that either quarterly or annual dividend payout and just automatically get you more shares of the company. Now you would ask, why would I do that? So if you got a company A's trading for $100 a share, and we just said they're going to pay out $4 annually per share, and you have $300 of them, you have 300 shares of them, that means you're going to get $300 every 3 months. So for every 3 months, when that $300 come in, they're going to turn around and just reinvest that back in to get you 3 more shares, because your shares cost $100. So now instead of 300 shares, you got 303 shares. In the next quarter, they got to pay you for not only the 300 shares, but they got to pay you for the 3 shares that you got in the previous quarter. So now you're getting paid for 303 shares. And they make that payment and they just reinvest more. So now you're at 308. And you can do the insane math over the course of 20 years that could be. I don't know the relative age of everyone. I'll just let it be known that I'm 41 years old. So I fully well expected to make another 25, 30 years. The math on that is just insane when it just keeps reinvesting that dividend payout to buy more stocks, which in turn increases my dividend payment. My grandchildren are going to think I'm the most awesome dude ever that existed, because we've taught our children that these stocks that we pass down to you will pass down to your children. That's what's being taught. Our children at their young age are being taught options. They're being taught about the core blue chip companies. They're being taught about dividends. So that as we transition on through the next realm of existence, they'll continue this process on, and that's what we want you all to do in your family. So the dividend reinvestment program automatically reinvests dividend payouts into more shares of that original company. DRIP allows you to continue building up your shares in core companies without even investing more out-of-pocket cash. You don't even have to put no more money into it. Last step, bottom line, use minimal cash investments to purchase options. Take proceeds from options to purchase stock in core companies that pay dividends. Reinvest dividend payments into more shares through a DRIP program. Your money making money ultimately leads to the freedom to make the life choices that most of us strive for. This isn't no master blueprint. I'm sure there are other ways. This is the Discover Your Options Circle of Six. This is our approach, and we just want to share it with you. If you have any questions about any one of these steps, please reach out to me or Coach Jackie Johnson, or reach out to other classmates. I'm sure we got some sharp people in the group that can add to the conversation. I appreciate your time. I will be talking to you guys in the next video.